Welcome to Trade of the Week with me, Zinati Guma. Up for analysis this week, Aspen, South32, Avantor Inc. and Parsons Corporation are up for technical analysis. And joining us with his survey of these counters is Loyiso Mpeta, CEO of Mshindi Bingwa Group Holdings. Thank you so much for your time, Loyiso. Quite interesting stocks that you have picked today. Particularly in the healthcare space, we're looking at one on the JSE and one in the US as well. Let's start off with the one back here at home, because for a while it has been in our mouths because of one wrong reason of a contract dispute, but also for a right reason where they've brought to South Africa Mounjaro, the weight loss drug. Of course, we know that the GLP-1s have been all the rage, but yeah, but actually on a technical perspective, we actually haven't touched on Aspen in about 3 years, right? And I think at that time they were still on the COVID high, or maybe they have just come off of the COVID high. So how have you been looking at the stock?
You know, from that sort of COVID run, it's really been sort of tipsy-turvy for Aspen. But again, it's a stock that I do look at from time to time, because it does give those opportunities once in a while, and then it has a strong run, and then it pulls back aggressively. So I'm looking at the current structure now, and I'm thinking, could it be a time not to necessarily start going in, but at least to keep a more concentrated sort of focus on it and see what developments transpire. So to get a bigger picture, let's go back to 2003, and we can see the stock had this very strong rally which peaked in January 2015, and you can see the stock has come off significantly from that all-time high and bottomed in 2019, so down 85% back then, and then in and around that, say from 2019 to 2021, had a strong bounce, and since then it's sort of pulled back again, almost heading back towards that August 2019 low. So the stock has struggled to sort of build sustained upside. But what am I seeing that is at least intriguing to say, well, perhaps let's start taking a look. Maybe there could be an opportunity in the short term. So zooming into the weekly chart and going again back to that August 2019 bottom. Now, an interesting feature of this rally from 2019 to 2021 is I don't have a clear Elliott wave count. So I'm not sure whether this is a 3-wave advance or a 5-wave advance, because the one possible count I could have is for a leading diagonal, where this is wave 1, wave 2, wave 3, an overlapping wave 4, and then a very strong wave 5. But there's a concept we use in Elliott wave analysis that we call the right look. That is, each pattern has to meet certain criteria and guidelines, and if there's a bit of too much of a distortion or abnormality with that pattern, we sort of view it from a tentative perspective. So this is the objective aspect of Elliott wave analysis. So that being said, when I do look at the pullback from 2021, so you can see this is almost a 4-year correction in Aspen. But here's where it gets interesting. If I connect this peak in 2021 with this peak in 2024, we then have this downsloping trend line. We project this trend line to this bottom here, and we have a very wide downsloping channel. And looking at price action where it is now, it is within that price territory of the lower support channel. So we have a bit of support that the stock is now testing. And if I have to just apply simple Elliott wave labels, I'm looking at this as a very, very large ABC flat pattern. So again, still very early to call any potential bottoms, but because price is at an area of interest, which is the downsloping support, it's worth to start looking at it and see how price reacts in this price region. I would start gaining more confidence and conviction if price were to break above 120 Rand a share, and then I would start to say, okay, maybe it's time to nibble. But again, we can see Aspen is a very fundamental sensitive stock, so you really need to have a strong fundamental conviction to support this very, very early stage thesis of potential reversal.
Okay. As much as we're seeing that that kind of downward sloping support level, it's quite interesting to see that Aspen has been beaten down so much that it's not too far off from that low from 2019. So yeah, you're right. As much as there may be opportunity, and I like also that you're saying that you're looking for opportunity in the short term, you must just be careful.
Yeah, just be careful.
A close eye on it.
Yeah, definitely.
All right. Well, let's take a look at South32. And actually, quite interestingly, today they released a quarterly production update, and investors liked it. I think in morning trade it was up about 2%. So just take us through the diversified miners' journey through the charts since 2015, right?
Yeah, so we actually did a first-time coverage of South32 last year, but we didn't look at the bigger picture. It was more of a quick zoom in. But now just taking a step back and looking at it going back to 2015, looking at this advance, pullback, advance, and the depth of this pullback overlapping with the previous advance, I'm looking at this as an unfolding leading diagonal. So this current sell-off is for wave 4, and the forecast is for further upside to complete the 5-wave advance. So as we did last year, the key focus has been on this very, very prolonged choppy correction. So let's zoom in. Last year, when we looked at it, the stock was rallying around, I think it was October, November last year when we touched on South32. And I had a very, very clear instruction again to say, I think this price level is about 34 Rand 50, something around that. I said, if price breaks below this level, then the bullish outlook is invalidated. So that setup was invalidated. But what am I seeing now that says, okay, let's take a look at this stock again? It does look interesting again. Is we have a bit of a what you would call a small double bottom here. We can see price bounced at 29.55, rallied and then sold off again, but only made a low at 29.18, and it's now starting to push up. So still, it's a very small double bottom, but I've seen small patterns like this lead to big reversals. But the bigger technical structure is that of a falling wedge. Now, a falling wedge is a bullish reversal pattern.
Okay.
So what we see here are these converging trend lines. So these converging trend lines create almost like a spring effect where price gets compressed, and then when the breakout happens, it tends to be very aggressive.
Okay.
So applying some wave counts to what I'm seeing here, I'm labeling this ending diagonal as a triple zigzag. So we've got waves W, X, Y, X, and then the final wave, it's unfolding as a textbook ABC zigzag for wave Z of wave 4. Now again, as we saw last year, we did give an invalidation level. I'm still looking at 29.18, or now I'm looking at 29 or 29 Rand 18 cents as an invalidation level. We can see that the stock hasn't really got any, say, high-performing commodity within its basket. We've seen gold rally, we've seen PGMs rally.
Oh, yeah.
Not so much exposure for South32 in those commodities. So it's still pretty much susceptible to depressed commodity prices in its basket. So for more safety, I would say, is for more conviction, I'd like to see the stock break above this upper trend line, preferably on high volume, and maybe see a bit of a correction and then start looking at buying. So again, similar to Aspen, it does look as if we could be in potentially or very close to a bottom, but we just need a bit more conviction from the price action for us to really start turning bullish. But again, if you are aggressive, I would use 29.18 as a stop loss from current levels.
All right. Well, let's cross on over to the US, and I'm quite fascinated by the fact that in all the volatility that's been caused by the geopolitical tensions, you're still finding opportunity in the US. I did mention that we're speaking about a healthcare company, that's Avantor in the US, and this is the first time that we're covering it.
So again, sticking with our theme around the US, you know, again, it's incredible how much volatility still gets triggered by Trump on anything to do with the trade tariffs and the US trade war with China. We saw a very small 3% correction about 2 weeks back in the S&P 500, but it's amazing how I don't want to use the wrong term, but how over-exaggerated certain corrections and volatility in the market can be based on a simple thing such as Trump threatening to impose higher tariffs or not attend a meeting with the Chinese leader. But again, within a week or two, the S&P 500 is back at all-time highs. So again, the opportunities that we're looking for is those stocks which have not really been significantly impacted by both the AI drive as well as the tariffs. So we're also looking for stocks which are generally poorly correlated or have low correlation to the S&P 500, because now you've got the index trading at all-time highs, you've got all these tech-orientated stocks trading at all-time highs. So the question then becomes, where are the opportunities? Where are the laggards that seem to be having an opportunity? So we can see that with Avantor here, which is a company that provides medical supplies and instruments, and we can see how disconnected it has been with the S&P 500. But from a wave perspective, I'm seeing a very, very classic textbook setup. Stock listed recently back in 2019, bottomed in 2020, had this massive rally for wave one, and this correction has really been as textbook as it can be. So we have first a classic 5-wave decline for wave A with a triangle for wave 4, a classic ABC zigzag for wave B, and this looks like a high probability or highly probable that it's complete now, a 5-wave decline for wave C. So for aggressive traders, investors, I would look at using a stop loss. Well, this is where sometimes using a stop loss is probably not in the best interest of the trade, because looking at the maturity of this downtrend from the wave perspective, it looks complete, if not complete, very close to completion. So even if the stock does make a new low, I wouldn't expect it to be a significant low, provided it stays above 6 Rand or rather $6.66. So yeah, I'm starting to turn bullish on Avantor, and like I say, for the more medium to long term orientated investor, probably not a good idea to use a stop loss. But if you are a trader and you're more into derivatives, then I would say at $10.83. But the bigger structure looks complete, or at least very close to completion. So I think this is a good turnaround point for Avantor.
Okay. And where would we be without tech? Now looking at a tech counter, this is my first time coming across this one as well. Parsons Corporation. Why the interest in this, and particularly amid in a time when all the attention is on the Max 7?
Yeah, you know, there's always other industries within the tech space that you will find solid companies with good revenues, good earnings. And Parsons actually is in the military complex, and we know how much the US love its intelligence and military complex. So they provide disruptive tech, basically around surveillance, cybersecurity, missile detection system. So it's quite an advanced and very, very military-orientated intelligence company. So again, we can see how disconnected its performance has been from the S&P 500, but looking at it from a wave perspective, I'm seeing potential upside. So similar to what we just looked at with Avantor, listed in 2019, bottomed in 2020. And what I'm seeing here is a wave 1, an ABC for wave 2, an extended wave 3, which also unfolded in a clear 5 waves, and then this strong sell-off for wave 4, and now it looks like the stock is recovering, or rather looking to make more upside, potentially to new all-time highs to complete this 5th wave. So I think there's still some upside potential in Parsons to make this new all-time high and complete the 5-wave advance. So
okay,
yeah,
would there be a stop loss?
See again, so this outlook would only be invalidated by a very strong sell-off, taking the stock back below 254, 56. Yeah. And this is why sometimes, again, depending on the nature of the exposure, whether you are in cash or using derivatives, sometimes stop losses can be more detrimental to the trade than supportive. But again, like I say, if you're trading CFDs, for example, I always say with CFDs, stop losses are a must. But once a stock is sort of, if you look at this sell-off, this rally has taken the stock back to about, say, 50% of this. So to use a stop loss here, where do you put a stop loss? So it becomes, so this becomes more of a medium to longer term type of setup. Okay,
that's a very, very interesting perspective. Thank you so much for educating us today, Loyiso. Always appreciate your time. That was Loyiso Mpeta, CEO of Mshindi Bingwa Group Holdings. And that's all for this week's segment, but do stay tuned for lots more coming up right here on Business Day TV.